Markets crash, economies freeze, people lose everything. But why? What causes financial systems to melt down again and again? In this video, we're diving into every major financial crisis in history, explained in just 4 minutes and 20 seconds. In the 1600s, tulip bulbs in the Netherlands were worth more than gold. Prices skyrocketed as everyone speculated until they didn't. When buyers stopped showing up, the market crashed. It's considered the first recorded speculative bubble. A British company promised endless profits from South American trade. Shares soared, based mostly on hype and lies. When reality hit, the bubble burst. Investors were ruined, and even Isaac Newton lost a fortune. Triggered by speculative lending and collapsing cotton prices, U.S. banks failed, businesses closed, and unemployment soared. It led to a depression that lasted nearly 7 years. After a railroad boom came a massive bust. The Vienna Stock Exchange collapsed, triggering a global financial downturn that lasted over 20 years in some regions. On Black Tuesday, the Roaring '20s ended. The stock market crashed due to excessive speculation, debt, and a bubble. It triggered the Great Depression, mass unemployment, soup lines, and a global economic collapse. In the 80s, Japan's economy exploded. Stocks and real estate hit insane valuations. But when the bubble burst in the early 90s, it led to a lost decade. Actually, more like 2. It started in Thailand and spread across Asia. Currencies collapsed, markets tumbled, and IMF bailouts followed. It exposed the dangers of hot money, debt, and fixed exchange rates. Russia defaulted on its debt, and the ruble collapsed. Global investors panicked, and hedge funds took a hit, especially long-term capital management, which needed a Fed-organized bailout. Currency peg plus debt equals disaster. Argentina's economy collapsed, protests erupted, and the country defaulted. At one point, it had 5 presidents in 2 weeks. Subprime mortgages, greedy banks, toxic assets. You know the drill. Lehman Brothers collapsed, and so did trust in the global financial system. It was the worst crisis since the Great Depression. After 2008, countries like Greece, Portugal, and Spain couldn't pay their debts. Bailouts followed, but so did austerity and social unrest. The euro almost broke apart. In March 2020, markets nosedived as the pandemic hit. Entire economies shut down. Central banks stepped in with historic stimulus. Recovery was fast, but inflation soon followed. After years of low rates and pandemic money, inflation surged. Central banks hiked rates. Tech stocks plummeted. Banks like SVB collapsed. The era of easy money ended. So what do they all have in common? Too much speculation. Too much debt. Not enough regulation. And the belief that this time it's different. Crashes happen when greed outpaces reason, and when people forget that bubbles always pop. Could there be another crisis? Of course. AI bubbles, climate finance risks, unsustainable debt. History doesn't always repeat, but it rhymes. Here's a recap of the biggest financial meltdowns. The Tulip Mania. The South Sea Bubble. The Panic of 1837. The Long Depression. The Great Depression. The Japanese Asset Bubble. The Asian Financial Crisis. The Russian Default. The Argentine Crisis. The Global Financial Crisis. The Eurozone Debt Crisis. COVID-19 Market Crash. Inflation and Interest Rate Shock.